So at Genus, we're very focused on the markets, very focused on our financial models, but we also have really a core focus on impact and the difference that we're making as a firm. So for Genus, we are a certified B Corp, which means we're certified as a company that is striving to be a force for good in society. We have to go through rigorous testing in order to get this. We had to show that we had sustainable products, that we have a diversified workplace, that we're employee-owned, strong sustainability policy. So we're proud to be certified B Corps. And so, in terms of the products that we're supplying to clients, we have a suite of fossil-free funds, which have been mentioned a few times. So these are sustainable funds. But the area that we're going to be talking about today is impact investing. So for those that aren't familiar with impact investing is going kind of a step further than sustainable investing. So with impact investing, we are trying to achieve our financial goals, but also make an impact at the same time. So instead of just taking out the bad stuff out of your portfolio, you're putting in the good stuff. So instead of just taking out tobacco, or maybe you want to take out gambling or fossil fuels or something like that out of your portfolio because you don't agree with that, you want to align your portfolio with your values, you're putting in maybe innovative healthcare companies or renewable energy, so that you can make an impact on society, on the environment, while also meeting your financial goals. And we see impact investing not only as a way to make a difference, a way to activate more of your capital to do good, but we also see impact investing as a hedge against big changes that are happening in our society, in our environment. One of those being climate change. So with climate change, there are large physical risks. So of course, we're seeing fires, floods, changes in weather patterns. But then there's also large transitional risk. So our economy is quickly changing to be more low carbon. There's more policies coming out by governments around the world around climate change. Of course, there's a carbon tax. And this is a large risk for a lot of companies and for a lot of portfolios, because a lot of portfolios are invested in companies that won't be able to transition as fast as everything's moving. So we see this impact fund as really a hedge against that. So you can make a difference, but this impact fund is probably going to benefit from these transitional changes. So that's quite a strong benefit for clients. So at Genus, we have a high impact public equity fund. So this is a fully liquid fund investing in public equities. And then we also, just about a year and a half ago, maybe 2 years ago, started the Genus SVX Impact Investment Council, which is more investing in private issuances. So we're investing in private equity, venture capital, private debt, infrastructure. But today we're going to focus more on the public equity side. So when we're looking at impact, it's very important to measure the impact that you're making. You don't just want to say that you're making impact and just feel good about that. You need to measure what you're doing. And so we've talked to a lot of our foundation clients, and the way that they're measuring their impact, many of them, is looking at sustainable development goals. So as I think Ian mentioned before, the Sustainable Development Goals, or SDGs, were created in 2015 by the UN. And so there's 17 goals that the UN is encouraging governments, organizations, companies to strive to accomplish. So some of these goals are good health and well-being, quality education, affordable clean energy. So when we're looking at our public equity high impact fund, we're making sure that each of the investments that go into that fund are contributing towards one of these goals. Usually they're contributing towards many of these goals, but they at least need to have a significant part of their business contributing towards these goals. And we have 3 different data providers that verify the impact that we're making for us. So that it's not just us thinking that we're making impact with these stocks. We have outside sources verifying this. And then if we look at the 17 sustainable development goals and look at the number of stocks within our public equity high impact fund that are contributing towards that goal, this is the chart we have. So we have some of the goals, such as climate action, decent work and economic growth, affordable and clean energy, we have a significant number of stocks that are contributing towards these goals. So with climate action, 25 of our stocks are contributing towards that goal, and we only have 33 in the portfolio, so it's quite significant. Of course, there's some goals that are much more difficult for companies to try and contribute towards, such as peace and justice, strong institutions. That's, it's hard to find investments in that area, but there are other areas where we feel like the companies that we invest in can make a big difference. And then here's just a list of the companies in our portfolio. I'm certainly not going to go through all this, but we just wanted to show you that all of the companies within our high impact portfolio are contributing towards at least 2 different sustainable development goals. And so there's a list of the companies and the goals that they're contributing towards. And I'll jump into a few of our top holdings here, just to give you examples of what an impactful company or impactful stock would be. So first of all, Vestas Wind. So Vestas Wind is a company out of Denmark. They design, they manufacture, they install, they maintain wind turbines around the world. And they're really a leader and an innovator in that space. So about 18% of the total world's capacity for wind energy has been installed by Vestas. And they're really cleaning up their supply chain, so not only making sure that their products are sustainable, that them as a company are sustainable, but they're making sure that companies that are supplying them are also sustainable. And they have some zero net carbon goals for the future as well for their supply chain. Next, we have Kingspan Group. So this is another top holding within our impact fund. So Kingspan Group sells sustainable building products. So they sell things, they sell products like energy or building retrofit products in order to lower the energy consumption of buildings. They have insulation for buildings so that buildings can be more energy efficient. They have water conservation technologies, energy conservation technologies that they're selling to builders. And then we also have Bristol Myers. So Bristol Myers, many of you may be familiar with. They spend about $5 billion per year in research and development to find solutions for major diseases around the world. And they have many pharmaceuticals, medicine solutions for many of the major diseases. And something that we really like about Bristol Myers is that they have a great program within poorer countries, within developing countries. They have very affordable pricing systems for developing countries. They also do a lot of capacity building for researchers, governments, and companies within developing countries to help them with finding solutions to major diseases within those countries in an affordable way. And then next we have Microsoft. So Microsoft probably isn't a company that you think about impact when you hear Microsoft, but they've really made a big transition, especially over the last decade, to become quite an impactful company. So a significant business line for Microsoft is their cloud computing. And cloud computing is much more energy efficient than local computing, so they're really contributing towards climate action with their cloud computing products, and that's one of the fastest growing parts of their business. They're also significant in education, and also with increasing productivity of employees, of workers around the world. And then finally, we have Berkeley Group. So Berkeley Group is a UK-based home builder. And so they are quite a leader when it comes to sustainable home building in the UK and globally. So about 73% of the homes that they build are using either renewable energy or really low carbon energy. And in the next decade, they want to have that 100%. So all of the buildings that they're building are going to be relying on renewable energy. So quite a leader in that space. So those are some of the holdings. And then as a portfolio, we're also trying to measure the impact that we're able to make for clients within this fund. And so we want to measure that against our benchmark. So when we're looking at financial performance, we want to measure against the benchmark. When we look at impact performance, we also want to measure. So the way that we do that is we look at the percentage of revenue of the average company in the portfolio that is made from impactful products or services. So a company like Vestas Wind makes 100% of its revenue from impactful products. But then there's other companies that may just have a significant business line, but not their whole business that is really impactful. So maybe 20% of their revenue comes from impactful products. But we want the average revenue from impactful products to be over 50%. And right now, within our Genus High Impact Fund, we have 57% of the revenue coming from impact versus the MSCI World Index, which is the benchmark for this fund, which is 11%. So it's significantly higher than the benchmark, and something that many of our clients are quite excited about that are invested in this. So impact investing in general and our impact fund is something that we're quite excited about, that we're quite passionate about. And now we have a 5-year track record for this public equity high impact fund. So it's kind of gaining even more steam. And it's something that a lot of our clients are excited about because not only, as I said, they can hedge against things like climate change, but they can also use it to activate more of their capital to really make a difference.